An individual who had worked for the Postal Service in Arizona found himself facing an IRS bill of $112,000. The actual amount came as a shock because his estimate was closer to $70,000. For 2 full years, he refused to open correspondence from the Internal Revenue Service since each piece of mail triggered overwhelming anxiety. When he eventually consulted with a taxation specialist, he discovered his initial obligation of $68,000 had ballooned to $112,000. The increase came from accumulating penalties and interest that grew with each passing day. During this period of avoidance, the IRS had placed a federal tax lien on his property, initiated proceedings to withhold portions of his Social Security payments, and reported his debt to the State Department. The government revoked his travel document. Visiting his daughter across the border in Canada became impossible. This person's situation is far from unique. His experience illustrates exactly what unfolds when someone carries a 6-figure IRS obligation without taking action. However, there's something critical I want you to understand immediately. He resolved the situation. The resolution didn't require full payment. $112,000 wasn't available to him. He succeeded by learning what choices existed, selecting the appropriate pathway, and taking steps before the IRS forced their hand. The content presented here serves educational purposes exclusively and should not be interpreted as taxation or financial guidance. Speak with a licensed tax specialist before taking any action regarding your particular circumstances. I'm Kevin Retires. My content explains tax regulations, financial pitfalls, and protective strategies for retired individuals, covering topics others won't address. If this sounds valuable to you, click the subscribe button immediately and activate notifications to ensure you catch every upload. Let me guide you through precisely what occurs when your IRS debt exceeds $100,000, the powers they possess against you, and 5 legitimate pathways available for resolution. The majority of taxpayers know only 1 or perhaps 2 of these methods. When this video concludes, you'll understand all 5 options. Before that, I must clarify why the figure you believe you owe rarely matches reality. When typical taxpayers claim they owe the IRS $100,000, they're referencing the final number from their tax filing, the line marked Balance Owed. That figure was established when the filing occurred or when the IRS made their assessment. From that moment forward, 2 processes have been running continuously without pause. Interest charges. The Internal Revenue Service applies interest to outstanding tax obligations. This percentage shifts every quarter, though recently it's been hovering around 7 to 8% per year. Compounding happens daily, not on a monthly basis. Daily compounding on $100,000 at 8% equals approximately $22 per day, $660 monthly. Almost $8,000 yearly from interest alone. Penalty assessments. Beyond interest charges, the IRS imposes a failure to pay penalty equaling 0.5% monthly on whatever remains unpaid, reaching a ceiling of 25%. When filing also doesn't occur, a separate failure to file penalty of 5% monthly applies, similarly capped at 25%. Therefore, someone who believes their debt stands at $100,000 based on a filing from 3 years prior almost definitely owes between $130,000 and $170,000 currently. I've witnessed situations where $100,000 grew to $200,000 within 5 years. Interest and penalties never rest. Weekends don't matter. Compounding occurs every single day. Action isn't taken. Your initial step before anything else involves discovering your precise obligation, not your assumption of what's owed, but what the IRS records show. Access this information by signing into your IRS individual online portal at the IRS website. Alternatively, submit Form 4506T to request account transcripts. Your transcript displays every assessed tax, each penalty, all interest charges, and every payment recorded. That represents your actual number. Begin with that information. Now let me describe what the IRS is authorized to do when you carry six-figure debt while taking no action, because understanding this should drive you toward resolution. The IRS can establish a federal tax lien. This creates a public legal declaration against all your possessions, your residence, vehicle, banking accounts, retirement funds. This information appears on credit reports and creates severe obstacles for selling assets, refinancing mortgages, or obtaining loans. For obligations above $100,000, the IRS nearly always files this lien. The IRS can execute levies against banking accounts. They transmit notification to your financial institution. The bank immediately freezes your funds and forwards whatever you owe to the IRS, up to your complete balance. If $47,000 sits in checking, that $47,000 can vanish within 24 hours. The IRS can garnish employment income. For individuals still employed, they can claim a portion from every paycheck received. The IRS can seize Social Security payments. They're authorized to levy up to 15% from monthly Social Security benefits. Someone receiving $2,000 monthly would lose $300 every single month until complete debt satisfaction. The IRS can cancel your passport. According to the FAST Act, when seriously delinquent tax debt surpasses $62,000 in 2026, the IRS can certify your obligation to the State Department. The State Department may then reject passport applications, refuse renewals of current passports, or cancel existing ones. International travel becomes impossible until debt resolution occurs. The IRS can confiscate property. Under extreme circumstances, they can take your home, automobile, or business property. Asset seizure remains uncommon and typically represents a final measure following years of disregarded notifications. But legal authority exists and enforcement happens. Each one of these outcomes can be halted or avoided through action. That's the purpose of the 5 resolution options. Option number 1, the offer in compromise. This is the method everyone's encountered, yet almost nobody properly comprehends. An offer in compromise permits settling tax obligations for amounts less than full debt, sometimes substantially less. The IRS accepts proposals when they conclude the offered amount represents the maximum they can realistically obtain from you. The IRS applies a calculation termed reasonable collection potential. They total the quick sale value of assets, approximately 80% of market worth, plus monthly disposable income multiplied by either 12 or 24 months based on your payment selection. When their calculated figure falls below what's owed, an offer in compromise may receive acceptance. Here are the qualification requirements. All mandatory tax returns must be filed. Current status on all estimated tax payments must exist. No active bankruptcy proceedings can be underway. A $25 application fee must be paid unless low-income waiver qualification applies. For lump sum choices, 20% of the offer amount must accompany the application as upfront payment. Approval rates range from roughly 33 to 40%. Processing requires 6 to 24 months. Throughout this period, the IRS typically suspends collection actions. Interest continues accumulating, but aggressive pursuit ceases. This becomes the optimal choice when genuine inability to pay exists. However, complete financial transparency is required. Everything gets disclosed. Each banking account, every asset, all income sources, every expense. The IRS verifies all information. Discovery of greater payment capacity than claimed results in offer rejection. Option number 2, the installment agreement. This establishes monthly payment arrangements. You remit a fixed sum to the IRS monthly until complete debt satisfaction, typically within the 10-year collection statute period. For debts exceeding $100,000, online applications aren't available. Form 9465, Installment Agreement Request, must be filed, and Form 433F, Collection Information Statement, will almost certainly be required, which demands detailed financial disclosure. Direct IRS phone contact can also establish this arrangement. The IRS will file a federal tax lien on obligations this substantial. penalties, and interest keep accumulating until complete balance payment. However, maintaining regular payments prevents the IRS from levying banking accounts, garnishing wages, or seizing assets. This suits situations with steady income, allowing monthly payments sufficient to eliminate debt within the statute timeframe. For 100,000 over 10 years, expect roughly 1,000 to 1,200 monthly, depending on prevailing interest rates. That's substantial but manageable for certain retirees, particularly those receiving pension income or rental revenue beyond Social Security. Option number 3, the partial payment installment agreement. This represents the option most taxpayers don't know exists. When payments large enough to satisfy full debt within 10 years aren't affordable, the IRS may accept reduced payments. You pay affordable amounts monthly. Upon collection statute expiration, remaining balances receive forgiveness. The IRS requires comprehensive financial disclosure. Case reviews occur every 2 years to assess changed circumstances. Income increases or asset acquisition may trigger payment increases. When situations remain unchanged, reduced payments continue until statute expiration. This provides powerful benefits for retirees with fixed incomes. At 72 years old, surviving on Social Security and modest pension, if the IRS determines 300 monthly represents affordability, 300 monthly is paid. After 10 years, whatever remains disappears. Option number 4. Currently not collectible status. When any payment would prevent covering fundamental living requirements, food, shelter, medical needs, utilities, the IRS can designate accounts as currently not collectible. This temporarily halts all collection activities. No levies, no garnishments, no seizures. Debt doesn't vanish. Interest and penalties continue growing. The IRS periodically reviews status. Financial improvement can restart collection activities. For retirees subsisting exclusively on Social Security without significant assets, currently not collectible status can effectively mean never paying. Debt remains until the 10-year collection statute expires, then forgiveness occurs. Hardship requires proof. Form 433F or Form 433A gets filed with income and expense documentation. The IRS compares expenses against their national and local standards. When calculations show payment impossibility while maintaining basic needs, currently not collectible status gets granted. Option number 5, bankruptcy. Under extreme circumstances, specific tax obligations can receive discharge through bankruptcy. This doesn't apply to all tax debts. Strict requirements exist. Typically, tax debt must originate from returns due minimally 3 years prior. Returns must have been filed at least 2 years earlier. Tax assessment must have occurred at least 240 days previously, and tax fraud or willful evasion cannot have occurred. Chapter 7. Bankruptcy can completely eliminate qualifying tax obligations. Chapter 13 permits paying tax debts across 3 to 5 years, sometimes at reduced amounts. This option demands an attorney specializing in tax bankruptcy. Self-representation shouldn't be attempted. Now here's the most crucial information I can share. The worst choice is what most people select: taking no action. Inaction transforms 68,000 into 112,000. Inaction revokes passports. Inaction causes 15% of Social Security checks to disappear monthly for years. Inaction results in IRS liens on homes requiring 30 years to pay off. Each of the 5 described options requires initial compliance, meaning all tax returns must be filed, every single one. Unfiled returns must be filed before proceeding with anything else. Offer in compromise applications, installment agreement requests, or currently not collectible status cannot be pursued with unfiled returns. The IRS immediately rejects such applications. Here's your action plan. 6 steps requiring immediate execution. Number 1, determine precise debt amounts. Access your IRS individual online portal at the IRS website or request account transcripts using Form 4506T. The transcript number represents reality, not mental estimates, not figures from 3 years ago. The current number including all accumulated interest and penalties. Number 2, immediately file any missing tax returns. Resolution options remain inaccessible without complete filing compliance. Missing W-2s or 1099s from previous years can be accessed using the IRS Get Transcript tool to view your wage and income transcript. It displays every information return filed under your Social Security number. Number 3, stop avoiding IRS correspondence. Every letter contains deadlines. Each missed deadline reduces available options and increases debt. Unopened IRS letters should be opened today. Search for CP14 notices displaying balance due. CP501 through CP504 represent collection notices, and LT11 or Letter 1058 constitute final notices of intent to levy. Receiving final notice means the IRS can act within 30 days. Number 4, select the option matching your circumstances. With limited income and minimal assets, begin with the Offer in Compromise Pre-Qualifier tool at the IRS website. It provides preliminary estimates of qualification likelihood and potential offer amounts. Steady income makes installment agreements or partial payment installment agreements potentially better paths. Genuine inability to pay anything warrants asking about currently not collectible status. Number 5, obtain professional assistance. For debts surpassing $100,000, stakes prove too high for individual handling. You need a tax attorney, enrolled agent, or CPA specializing in IRS resolution, not regular tax preparers. Someone who has filed Form 2848 power of attorney and previously negotiated with the IRS Collections Division. Attorney-client privilege protects communications. Nothing else provides this protection. Number 6. If passport revocation has occurred or levy notices have been received, act without delay. Entering qualifying agreements, such as installment agreements, offers in compromise, or currently not collectible status, will stop passport certification and prevent or release levies. However, you must initiate the process. The IRS won't do this for you. I want to speak directly about something before concluding. I recognize this subject terrifies people. I know some viewers haven't slept properly for months because of outstanding obligations. I know some have avoided opening mail, avoided answering phones, avoided thinking about it because the numbers feel insurmountable. I comprehend that reaction. However, the fear exceeds the actual process. Every described option works within your capabilities. The IRS doesn't expect impossible achievements. They expect realistic plans. Let me conclude with one point. The IRS won't disappear. Debt won't spontaneously vanish. Interest compounds right now during this video viewing. $22 daily on $100,000. That equals 154 weekly, 660 monthly, almost 8,000 annually. Each waiting year enlarges the problem and diminishes available options. Yet the system contains built-in options. Offers in compromise exist. Partial payment installment agreements exist. Currently not collectible status exists. These aren't loopholes. These are programs the IRS established specifically for people unable to pay completely. They exist because Congress recognized that financial destruction helps nobody, not taxpayers, not government. Those who lose everything to IRS debt aren't those who owed the most. They're those who waited the longest. This is Kevin Retires. Weekly I explain tax regulations, financial traps, and protective strategies for retirees covering information nobody else addresses. If this video provided value, click the like button immediately. It requires 1 second and helps this content reach more people needing this information. If subscription hasn't occurred yet, click subscribe and activate the bell to avoid missing the next upload. Upcoming videos I'm creating could save you thousands of dollars. I don't want you missing them. If you know someone owing the IRS who's too frightened to address it, share this video. 20 minutes now could prevent years of anxiety. Leave a comment. Have you ever owed the IRS beyond your payment capacity? What occurred? Share your experience. I read every comment, and the most frequent situations become future content. I'll see you in the next one.